So you're living in Canada as a citizen or a permanent resident, and you're dreaming, really dreaming, of having your parents or grandparents come visit. Not just for a few weeks, but for a good long while. If that's you, you are in exactly the right place. Today, we're going to break down everything you need to know about Canada's Super Visa. You know, it's the one question so many of us think about, right? How can we turn those short, 6-month visits into long, truly meaningful stays? How can we get the grandparents to be a real, everyday part of their grandchildren's lives? Well, the answer just might be the Super Visa. Okay, let's get right into the nitty-gritty. A regular visitor visa, it's great, but you're usually looking at a 6-month stay max. The Super Visa, though, that's a total game changer. It lets your family stay continuously for up to 5 years at a time, and the visa itself is good for 10 years, so they can come and go without the headache of reapplying over and over. But, and this is a big but, it comes with some very specific rules, and that's exactly what we're here to walk you through. So, to make this super simple, we've broken it all down into 5 clear parts. We'll start with eligibility, can you even apply? Then we'll tackle the big mandatory insurance role. We'll get into the tricky topic of pre-existing health conditions, and then we'll wrap it all up with a clear step-by-step action plan to get you going. All right, let's dive into the first and, honestly, the most important step. Before you do anything else, you've got to confirm if you can financially sponsor your family. This is the bedrock of your entire application. So why does the Canadian government have this rule? Well, it's pretty simple, really. They need to know that your parents or grandparents will be fully supported by you during their long stay. It's your promise to them and to Canada that you can take care of them without them needing to rely on any social assistance programs. Now, this is where you need to pay close attention because calculating your family size isn't what you might think. It's not just your household. You have to count yourself, your spouse, and any dependents you have, plus the parents or grandparents you're inviting. So let's say you're a couple with 2 kids and you want to bring both of your parents over. That's a family size of 6. You'd have to look at the income requirement for a 6-person household. Okay, now for the next crucial piece of the puzzle. This is the one that brings up the most questions, so let's clear it up. The mandatory medical insurance. If there is one number you burn into your brain today, it's this one, $100,000. Every single person applying for the Super Visa, so each parent or grandparent, has to have proof of medical insurance coverage for at least $100,000. This is an absolute non-negotiable requirement. It's there to protect them and you from potentially massive healthcare bills. And this is a really big deal. It used to be that you had to buy this insurance from a Canadian company, period. But as of 2025, things have opened up. Now you can look at approved international providers too. And you know what that means? More competition, more options, and hopefully better prices for you. Okay, so what are we really talking about money-wise? Well, the cost, the annual premium, really depends on age. For a parent in their early 60s, you might be looking at $2,000 to $3,000 a year. But once they're in their early 70s, that cost can easily jump to over $5,000. You absolutely have to factor this into your budget. I know what you might be thinking. Those numbers are pretty high. But don't worry, there are a couple of smart ways to bring them down. First, think about a higher deductible. That's the amount you'd pay out of pocket before the insurance kicks in. Just choosing, say, a $1,000 deductible can shave 15 to 25% off your premium. And second, if you can, pay for the whole year up front. Most companies will give you a 5 to 8% discount for that instead of paying monthly. All right, now we're getting into a topic that can feel a bit complicated, but it's absolutely vital you understand it. Let's talk about how insurance companies deal with existing health problems. We need to make this crystal clear. So, what on earth is a stability period? Imagine your dad has high blood pressure, and his insurance policy has a 120-day stability period. That means for the 120 days before the policy started, his high blood pressure had to be totally stable. No new symptoms, no doctor changing his medication, nothing. If it wasn't stable and he had an emergency related to it, that specific condition might not be covered. It's a really important detail. And this chart right here, it tells the whole story. It's all about a trade-off. If you choose a policy that does cover stable pre-existing conditions, yeah, it's going to cost you more upfront, maybe 30 to 60% more. But it could also save you from a $100,000 hospital bill down the road. It really comes down to a decision about cost versus risk. Okay, let's bring this all home. We've talked about the what and the why, so let's put it all together in a clear, step-by-step action plan on how to get this done. When you look at the whole journey, from the moment you start gathering papers to the day you get a decision, you're typically looking at about 3 to 6 months. It starts with prep, then you buy the insurance, then you submit everything online, and then you wait. Seeing it laid out like this, it feels a lot less intimidating, right? So while you're busy getting your financial proof together, your parents have their own homework. Of course, they'll need a valid passport and that medical exam from an approved doctor, but here are two things that are absolutely critical. First, your letter of invitation. This is a formal letter where you promise financial support and outline the visit. And second, and I can't say this enough, they must have strong proof of their ties to their home country. Things like property they own back home, local bank accounts, other family members staying behind. They have to convince the visa officer they have a compelling reason to go back home eventually. Okay, listen up, because this is probably the single biggest mistake people make. You have to buy the insurance policy before you hit submit on that visa application. You need to have the proof of purchase ready to upload with everything else. If you don't, it's almost a guaranteed refusal, and you're back to square one. So, if you're going to walk away remembering just 4 things, let it be these. 1. Check your income first. 2. That $100,000 insurance policy is mandatory, so budget for it. 3. Be 100% honest and upfront about any health conditions. And 4. Give yourself a realistic timeline, 3 to 6 months. Look, the super visa process, yeah, it takes some careful planning. But the reward? Having your family here with you for years, not just a few months, that can be absolutely priceless. With the right info and a good plan, you can totally do this. So is it time to start planning that reunion?